What's going on, everyone? Happy Friday. Today is an absolute phenomenal day for the bulls, especially for all of you guys who have been day trading. If you guys caught some moves today, congratulations. In this video, I'm going to show you guys how I made over $1,000 trading NVIDIA options in just under 45 minutes, right? So I'm going to get into the strategy. I've spoken about this strategy before. It is so simple, okay? When you actually ignore, all of the outside just kind of, nonsense, right? Forget about what everyone else is doing. Focus on what you're doing. Focus on the stocks that you like to trade. If you guys have been following me on my YouTube channel, you guys know I love to trade stocks like NVIDIA, Tesla, Apple, AMD, all of these big tech mega cap stocks in the triple Qs. Predominantly, that's where 95% of my attention is focused each and every single day. And the reason why I focus mainly on NVIDIA and Tesla is because their average true range in the day, meaning, from high to low, from peak to trough, is going to be anywhere between 5, 6, 7, 8, 9, sometimes $10. And when I'm looking to trade these stocks, I'm not necessarily looking to make $5, $10, $15 on the names. All I'm looking for is just 1 point here, 2 points there, 3 points there. And it's my position sizing that allows me to make more money in those moves. So realistically, I don't need the most perfect entry. I don't even need to be right 100% of the time. I'm going to have a clear out and a clear stop on when, the trade fails. I know that I was just on the wrong side of the probability. One thing that I want you guys to understand, especially if you're a new trader, trading is just a probability-based business, meaning that you need a strategy, a system, a set of rules in place that's going to provide you with an edge, and then it's just up to you to kind of manage that particular edge on the particular trade. You have no idea once you get into the trade whether it's going to be a winner or a loser. The only thing we have control of is what we do after we get into the trade. So let's go ahead and dive into the charts here. What we are looking at is NVIDIA. Now, this stock has been an absolute rock star and has been absolutely just ripping the face off of shorts ever since they've been trying to short this heavily at 260s. Currently, as we stand here, we're at 10:30 in the morning Pacific Standard Time, and we're trading at 284.67. Now, I did not catch nearly the whole move, or even 60-70% of the move. But what I want you guys to look at here is I did take the 277.50 calls. Now, today is Friday, 0 days till expiration on those options contracts, so they're a little bit cheaper. I was able to go a little bit more than I normally trade. Normally, I'm going to be trading 10 contracts on NVIDIA or 10 contracts on Tesla. I was able to bump that up to 20 contracts today because they were a little bit cheaper just due to the fact that it's 0 days till expiration on these contracts. Also keep in mind if that you are playing zero DTEs, whether it's on the SPY or the triple Qs or on Friday on a lot of these names, make sure that you lock in profits, okay? Now, was there a possibility? Did I have a thought that this potentially could run to 284, 285? Sure. Did it have to get there? Absolutely not, right? So anytime you kind of get into these plays and they start to work in your favor, you need to lock in those gains, right? If you feel and you're a type of person that needs to have like skin in the game, right? Like you can't bear watching the stock continue to climb higher after you've already sold out of your position, then the best thing that I can say for you to do is hold on to a runner, even if it's just one contract, even if it's just one shares. Psychologically, that's still going to give you that feeling like you're still in the game, right? Like not like you just sold everything and you watched everything just continue to explode. On that runner contract or those running shares, make sure you just set your stop loss to break even on them so it becomes a free trade and you went ahead and you took that money. So what we're going to dive into here is the 5-minute time frame. Okay, I'm going to show you the setup and then I'm going to show you why I sold and where potentially we could have been heading, right? So if we kind of look at the light gray box here, this is all of pre-market data. We can see that we got our last close at 5:40 a.m. over the 20 period moving average. Now, being that I'm an options trader, there's no possible way that I could have bought options at 540 once we went from trading below the 20 SMA to over the 20 SMA. So as a trader, it's my job to kind of sit there through pre-market, do my research, do my homework, and understand, okay, what is my next area of supply? And if we get over that, potentially where could we be heading after that? So if you kind of look at where we spiked up to here in the pre-market, We put in a high in the pre-market at around 278.50. Okay, so 278.50. So automatically those pre-market highs, what I need to see happen is I need to see that price action break my pivot, which the pivot is going to be pre-market highs at 278.50. We're currently trading over the 20 SMA. The 20 SMA is the purple line that you see on my chart. The green line is the 5 SMA. And the blue line is the 10 SMA. Okay, so those are more of my power trending SMAs. And then my reason why SMA, meaning, where am I actually looking to take trades, is going to always be that 20 SMA on a 5-minute time frame. So what I'm looking at here is the pivot of around 278.50. As the market opens, you can see here we put in a nice spike, right? We put in a nice spike all the way up into our next supply zone. That next supply zone is this blue line that's kind of running just right across the screen there. That is called a linear regression channel. So I have these channels on here because typically when price action breaks these channels, we either break them, retest, and continue higher to the next area of supply, or we break down, put in a new low, kind of back test, and then continue down to the next channel level. So as you see, we broke into this channel here right off the bell, pulled back just a tad. This was enough indication for me that if price action confirms the new high over our pivot, again, our pivot was those pre-market highs. That pre-market high was 278.50. You can see off the bell, we put in a new high at 279.29. Now, the reason why I went in the money here at 277, again, is because those contracts were a little bit cheaper. It is Friday. They are 0 DTEs. Okay, so normally if this was a Monday or a Tuesday, I would probably be playing the next strike price outside or as close to that price as possible. So you can see here, as we take this price out at 6:40 in the morning, we put in a new high to 279.68. This was the initial candle that I got in at, was 6:40 a.m. Pacific Standard Time. And as we continue to power trend up here off this 5 SMA, you can see we had one pullback here to kind of test this rising, power SMA here, sitting at around 705. And then we got the next high here. And as I'm looking at the chart, what I like to do personally is when you have this much space, when you do break into a new channel, I like to sell 40, 50, 60% in the middle of that channel, because that's my sweet spot. Because the last thing that I want to see happen here is I would hate to get into this trade, be in the profit, and then have it come all the way back down to break even just to kind of back test that move. And that creates a little bit more anxiety, it creates a little bit more FOMO, creates a little bit more confusion, right? A little bit more stress that, we really don't want to see. So anytime we break into a new channel, I like to start selling off in my position so I can be a very happy camper about halfway through that channel. Now, obviously we know, if you believe in technical analysis, that, once stocks break an area of supply, typically they like to try to gravitate towards that next area of supply. When we break down an area of demand, they go down to the next area of demand. Now, how big the move can be all depends on how much room you have in the trade. But if you're looking at this particular trade here, you can see that once we got over this pre-market high pivot here and broke into this channel, that potentially we have space from 280 all the way up to 284. That's a $4 move. Remember what I've said in a lot of my other videos here. I'm not looking to catch $4, $5, $6, $7, $8, $9, $10. All I'm looking to do on these type of stocks is go in with size that's heavy enough, that's adequate enough to take $1, $2, $2 and $2.50 off the stock. That way I don't have to have a perfect entry. That way I don't need to catch the whole move and put myself through a bunch of emotional stress and, a potential drawdown to try to get that move before I even get into profit. All I'm looking for here is to take $1 here, take $2 there, and then kind of wrap it up here. So on those 20 contracts, it was able to net $1,575 on the overall day. Again, fantastic day. You don't get days like this where you do kind of trend all day, right? And if you kind of look at where we are now, once we broke the top channel here, we kind of came and been consolidating sideways for the past 2.5 hours, and we're starting to break out here once again. So if we can get this continued breakout, 290, 300 seems to be the next stop on the video if the overall market wants to continue to push. But I just wanted to kind of recap you guys on my trade and my thought process and what exactly I was thinking on this particular trade here. So just to kind of recap, we were trading below the 20 period moving average. The last close that we got over the 20 period moving average here was in pre-market at 5:40 a.m. We put in a new high. This new high becomes my pivot. It's the pre-market high here, at least 30 minutes before the market opens. I don't like to go all the way back to 2 a.m. I just like to look at what was the most recent high in the previous 30 minutes before the market opens. Typically speaking, right? Typically speaking, that's where you're going to get most of your action as it gets closer to, the bell, right? So this pre-market high, this pivot of 278.50, what I need to see after that is I need to see price action break that pivot. And once we break that pivot, I need to see it put in a new high. And then I need to see that new high get confirmed. And it's when that new high gets confirmed, that's my entry, and my stop loss is going to be below the 20 period moving average. So if the reason why I'm getting into this trade is because we broke now from below the 20 period moving average to over the 20 period moving average, then my stop loss has to be below that 20 period moving average. Another stop loss that I always like to use too is the reason why candle. I'll put my stop loss below that wick. So the stop loss would have been somewhere around 277, right? So 277 would have been my stop loss. My entry on this would have been somewhere close to around 278. So you're risking about $1 to $1.50 on the trade. Now, if that's a little bit too much risk for you and you're thinking, I don't really want to risk $1, $1.50 on the trade, you have to understand that NVIDIA is one of the biggest range trading stocks in the day. So if we're looking for 1, 2, 3, 4 points on NVIDIA, you gotta be okay with risking $1, $1.50 on the overall trade. It's not like you can really get into these trades and risk, 10, 15 cents to try to make dollars, right? Although sometimes it happens, you don't necessarily have to risk the full 150 to see if you're going to either win or lose the trade. But what I'm saying is that when these stocks are moving in dollars, you're going to have to risk at least $1, $1.50 on the move. Now, the way to kind of compensate that is to size down a little bit. So instead of taking maybe 10 contracts and risking $1, maybe you're only taking 5. Instead of taking 100 shares and risking $1, maybe you're only taking 50. You lose $1, $1.50 on 50 shares, you're only talking about $50, $75 loss. That's a paper cut. That's a couple cups of coffee. You can continue to trade and stay in the game, but it's when you try to trade 10 contracts and risk $1 when your overall account size is only $2,500 or $3,500, or you're taking 1,000 shares, right? You're taking 1,000 shares and risking $1, and you don't really have the funds to kind of day trade 1,000 shares. Then it doesn't really make sense. So risk management is always key. Mindset, psychology, and emotions is always second, and the charts is always third. As long as you just respect the levels and respect the charts, you can pull days out of the market like this each and every single week. Now, sometimes these trades don't happen each and every single day. That's okay. I'm going to do another video on Tesla because I was waiting for this Tesla trade for 4 days. Okay. So I waited essentially all week for one particular trade, and I'm going to show you guys that in the next video. Make sure you hang tight, subscribe, comment, leave me a thumbs up. I want to know what you guys want to hear about. Also, if you guys want to join the Discord, that link is down in the description box below. If you guys would like access to my strategy guides and coaching, one-on-one mentorship, make sure you guys visit evolutiontraders.com, and I will see you guys all in the next video.